What's up everybody? Welcome to the Stocks channel. Today SPY hit a brand new all-time high, but then we immediately saw sellings after we hit the price target. So the question from here is, will the bears make an appearance in the month of March? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So intraday, SPY did hit the price target at 514, and that's where I drew the arrow while we were above 507. But the first thing I want to do is I just want the zoomed out view of this very impressive bull rally that we had off of the October lows. And the number one thing I want to focus on is the vertical nature of this rally, because we were not getting very deep pullbacks or a lot of what I consider a healthy bull market structure of higher lows and higher highs. While we eventually did get this higher low in here in January, if you look at the rally through November and December, it was very vertical with maybe one red candlestick along the way. So there are things that I look at under the hood when I'm looking at my technical analysis, especially for larger macro level moves. And there's going to be a couple things I want to caution you against. And the first thing is, try to be very disciplined with your trade plan. Don't get bearish just because everybody else is getting bearish. And don't get bearish just because you think something can't continue to go higher. If you had made that mistake anywhere along this very vertical rally, you would have missed the entire rally waiting for a pullback. Even though eventually we did get pullbacks, they may not have been impressive enough, and a lot of people just weren't buying into them because they expected something deeper. So as I've said before, nobody knows where this thing is going to top. People have been guessing the top for multiple months, all the way back to almost over a year now, and they continue to get it wrong. But you do have to remember, you are a trader, and part of your job is simply to manage risk. So even when we look at this very powerful bull trend, we also have to zoom in a bit and realize that buying up here is not necessarily a very low risk trade. It's actually extremely risky because we are getting a little overextended and we are reaching these upper price targets. So even if you think SPY is going to 520 from where we closed today, that is only another 1.5% higher. And if we just go to the closest gap fill, which is 497 to the downside, that is about a 3% move to the downside. So we have twice the amount of risk to the downside as we do to the upside. And of course, SPY could go above 520, but the question is whether or not you think it will and whether or not you're going to put that in your trade plan. So being perfectly honest with you, I am sitting in a lot of cash lately because I just don't care if SPY goes to 520 without me, because I doubt it's going to go much higher than that without some type of major correction along the way. When I say major correction, I'm talking about a sizable pullback of anywhere between 5 and 15%. So if I think we could go down 5 and 15%, I'm not really dying to buy SPY up here around 514 just in case it goes to 520. Now, it doesn't mean you can't do that. As long as you're managing your risk and you're staying bull above 507, that's completely fine. But even the trip back down to 507 is about the same amount of downside as there is upside. So this is going to be one of those points in the market where it's completely fine to just sit in cash, and that's why I will be carrying a lot more cash, because there's really no point for me to get overly risky with my money up here, and I just don't see enough reward without some type of pullback first. So there may be other traders that agree with me, and they may start pulling money out of the market as well, and it could just be a simple profit taking that brings us down here to fill this gap at 497. And there's the possibility that we don't get this pullback and we don't go fill that gap at 497. So if we're just strictly looking at the chart, we need to look at this level at 514, and we need to understand the upside reward is probably going to be 520 if we break above 514, and the downside reward is likely going to be 497 if we get rejected from here and start to see profit taking and selling. So I would focus on that. I'm going to leave the down arrow because that's the scenario that I'm actually preferring right now. And if I'm going to draw an arrow, it needs to have some kind of conviction on what I believe. So I do think we have a lot more downside pressure coming, and I could be completely wrong and we still have the bull trend. So just because I'm drawing a downside arrow doesn't necessarily mean you want to go short the market. And if you do want to go short, that's fine too. Just put your risk level above the breakout at 514, or somehow manage your risk around that risk level up there at 520. So once more, I'm not saying we have to go lower, and I'm not saying we need to go lower. I just don't see a lot of risk reward that's favorable for the bulls at this time, which could lead to some profit taking and selling, and that could be the downside pressure that gets us to fill the gap. On the NASDAQ 100 triple Qs, we were down 0.36% today, and the triple Qs also hit the price target that I was looking for. And yes, we could go higher towards 448 and 450, But as you can see on the daily chart, we're outside the upper Bollinger Band and we're getting a little overextended if we continue to push without a pullback. So just like SPY, I'll draw some arrows. I think there's a good chance we could push a bit higher, but then I think we're going to start seeing that profit taking, and that's going to take us down here towards this gap fill at 425. Again, there's no reason to short this just because I'm drawing arrows. I just want you to be aware I do see some downside pressure, and the safest way to play downside in a bull trend is simply raise cash. Shorting a bull trend may work as long as you know when you're getting out if you're wrong, but simply just continuing to accumulate short positions within a bull trend is definitely not anything I would suggest doing here. So look for a little more upside. We could hit the 450 zone, but once we get there, I think we're going to be met with profit taking and we're going to start to see some selling. And I do think that selling pressure eventually will pick up this month, and I do think we'll come down here and fill this gap. On the Dow Jones, we were down 0.28% today. The Dow Jones is also struggling to break this level at 391. So again, I'm going to move this arrow, and I think while we're below 391, there's a better chance we come down towards 386 to 385. I'm not going to get too crazy with the downside here because the Dow Jones is really just going sideways and consolidating, and there really doesn't need to be a major downside move. We could just go sideways and build up energy to get ready for that next push higher. On the Russell 2000 IWM ETF, we were down 0.09% today, but intraday we hit the price target, which was up there right around 207, and that is exactly why we saw profit taking, because that's what a lot of bulls were looking for, to take profits, and that's exactly what they did today. Now you can see we had very low volume, and we really don't have the high volume buying that I would like to see at this point, and we do have a gap down here at 201. So in the small caps, I don't necessarily think they have to follow the rest of the indices because they haven't been, but I will say if we do pull back, I think that's going to be a buying opportunity right around 200 to 201. And then from there, I think we will break out and start running higher into the 214 zone. So we hit that target at 207, and from here, if we get too much profit taking, we could get that pullback. But once we break above 207, you can also buy the breakout for that trip to 214. On the ARKK ETF, we were down 0.9% today, and we hit the downside projection that I had, which was the gap fill at 50. And as you can tell from the arrow, I think we could find support between 49 and 50 and start pushing higher towards 54. So manage your risk right there at that support zone, and if we break down below it, then we're coming back down towards this support zone at 47 to 48. On the VIX, we were up 2.74% today, and the VIX is still in a bear trend, and it's likely trending down towards 13 to 12.8. And if at any point the VIX spikes and we see the VIX getting way out here above 15, then we could be due for that pullback. But keep in mind, that's just a pullback within a bull trend, and it likely will be met with buyers if we get a deep enough pullback. On Bitcoin, we're currently up just under 7%, and we hit that price target at 67,500, and now we're knocking on the door of a brand new all-time high, and I believe the previous all-time high was right around 69,000. Now, I personally do not think Bitcoin is going straight for brand new all-time highs right now, but that doesn't mean it can't, and we're definitely getting a high enough volume candle down here to push us to new all-time highs. But as you can tell, we are very overextended, and Bitcoin is going to struggle to hold a breakout to a brand new all-time high if it does it too quickly. So I think we will find resistance in sellers right around 68,000, and then we'll likely start to get a pullback that could bring us all the way back down to the breakout at 52,000. And then I think we'll build out a bull flag and consolidate for a few months before we get ready for the next bull run that's likely going to take us out into 2025. However, if we break 68,000, we will likely go break the all-time high, and then we'll be looking for that price target just below 75,000. On Nvidia stock, we're up 3.6% today, and we hit the price target at 850, and if we continue higher, it looks like the next price target will be up there right around 888. Now, we do have a gap to fill to the downside because today we did gap up, and that gap is down here at 823. And that's also right around the breakout of the previous price target at 816. So even if we get a pullback in Nvidia, we could find buyers right around 816 or the 5 EMA, and that gap fell at 823. If we break down below 800, then we're likely coming back down to retest the breakout at 740. On Tesla stock, we were down 7.16% today, and Tesla is giving a very good image of why this is likely going to be a stock picker's market, because we do have bull trends in SPY and the triple Qs. But meanwhile, Tesla is getting a high volume candle day going down over 7% and breaking down below all the moving averages. So from here, we need to update the arrow because I told you if we broke down below 197, it was possible we come back down towards 183. And then from 183, we could get that higher low and start pushing higher yet again. Now, if we can't hold 183, this is likely a lower high rejection just below the gap fill. And that means we would come down towards this lower support channel, which could easily take us into the 160s or at least the low 170s. So this will be the last chance to stay bullish above 183, and if we break down below 183, it is definitely going to look like Tesla is looking bearish and going lower. On Apple stock, we were down 2.54% today, and Apple did break down below this critical support that I gave you, which was going to be between 177 and 180, which is now starting to look like this is a confirmed head and shoulders pattern that is breaking down below the neckline, which could easily take us down towards this gap fill at 167. So just be very cautious here. If you're following my plan, it's that this is likely going to be a bear trend, trap. However, if I'm wrong, you need to still manage your risk while we're below 180. So you can manage risk many ways. You can just have a smaller position, or you can slowly accumulate as long as you understand we're likely going down to 167. Or you can continue to manage risk as we break through support and then buy back on strength once we see a confirmed balance. So it doesn't matter how you play it. You just need to have a very strict plan and manage your risk accordingly. And I do still think Apple will go higher towards 187. So for me personally, with a stock like Apple, I'm just going to continue to accumulate and manage my risk as needed. So just be aware of that head and shoulders pattern while we're below 180. And because we did not hold 177, we are now looking for 174 and 171. And then if we break all of that, then we have this gap down here at 167. And we are way outside the lower Bollinger Band, so we're definitely getting very oversold. So jumping back over to the S&P 500, there's a very good chance the bears make an attempt to show up this month, and they will try to drive prices lower. And remember, sometimes being a bear is simply being a smart bull that's locking profits. Remember, you don't have any profit until you sell, so a smart bull that's a trader is eventually going to sell, and that is going to put downward pressure on the market. And then the bears that want to short the market will pile in and add fuel to the fire. So nothing goes up forever, and nothing goes up in a straight line forever, and at some point we will need another higher low to continue to build this trend from. So while I'm not bearish because the chart is not telling us to be bearish, I'm definitely managing my risk and raising cash and being disciplined on where I see my risk and reward ratios. And right now, if I'm being honest, I like the downside risk reward ratios better than the upside. Now that doesn't mean every stock. There's still plenty of opportunities to buy low in stocks like Google and Apple. So that's why I do remind you this is a stock picker's market. There's no reason you need to trade the indices, but just be aware this could be a very volatile month. And if you're not picking the right stocks or you're not trading in the correct direction, you could still have a very horrible time. So this is what I'll be focused on in the Stock Channel Discord server this month. I think there's going to be plenty of opportunities for bears and bulls alike, as long as you're looking in the right areas and you're managing risk around the correct levels. So if you want to come do price action trading with us, you can join the Stock Channel Discord server. And while I do not expect there to be a lot of trade ideas early in the month, I think there's going to be a lot of trade ideas in the second half of the month. So it should be an exciting month, but we need a few days for things to kick off and really start to get moving here. So just stay patient, stay disciplined, and work on those trade plans, and then react to the price action around the critical levels. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.